Market conditions continuing to be bullish in this bull market, seeing the rank of the bull market right here at 21.78. We've actually seen that start to curl up back again this last few weeks right here. So potentially running back up into that 22 range. The issue that we're running into now is we're at the upper end of this range. We're starting to see some extremes here on momentum to the upside. We're also seeing, well, we really haven't seen breadth improving much in this last week or so, although it is still bullish and we're seeing sentiment still stuck in that upper range, which as I've mentioned in the past, that can stay up there. Sometimes it's stayed up there for years, so that sentiment can stay relatively high on this indicator. Buy-sell ratio, we're seeing a little bit of a downturn here, 2.4. We've kind of topped out around that 2.5 area, and it's still bullish, but towards the upper end of that range. Sentiment also right here. So we haven't really had a pullback in most of this uptrend, and that certainly could be happening. We can pull all the way back into this 50% zone and still be in this upward trend. We'll keep an eye on that and see what that looks like over the next day or two. Let's jump over to the indexes. We've got let's jump in here to bonds first. TLT, still seeing a little bit of a pullback there, but still in that upper momentum zone. Bonds obviously have lots of work to do as bonds are moving higher. Interest rates are moving back down again. So we want to see that this TLT chart continue to be bullish right here, even though it is at the bottom end of that trend. If we go out to that 1 year time frame, get a little bit different perspective here, where you can see that nasty downturn from a year and a half ago, a couple years ago, the rally where we had equities participating, and then just lots of retracement, a few false attempts at new uptrends, and a decent looking beginning to this uptrend here. 92 is that resistance on TLT. Keep an eye on that. We're also seeing that short-term bond, SHY, continuing to prove the last 3 or 4 days, pulling back a little bit here. If we take a look at sectors, we're seeing really green across the board. Didn't change much from yesterday. A little bit of a pullback right here, and base materials, well, not leading the way, but we've got our rank here: technology, financials, industrials, overall looking positive right here still. Commodities, we're seeing really massive moves in commodities. We're seeing silver continuing to just skyrocket. We're seeing gold breaking out here at this upper range, and we're seeing copper just having an insane run here as well. So we're seeing these core basic materials continuing to increase. We're actually seeing natural gas also moving higher. UNG is the ETF symbol for natural gas, and it's having a big run here off of the bottom. So keep an eye on these base material stocks that are showing up in the muscle stocks group. We're seeing a few come and go here and there. Yesterday we saw quite a few gold stocks in there, and they'll continue to float to the top. Today we're seeing Moneyline, which is in that upper momentum zone, looking good. It's lots of consolidation and a possible attempted breakout there around that $85 range. And AAY, which has been a high flyer, this is a new buy signal, but it's got a lot of work in that upper trend. It's still a high ranked stock just because it has been kind of a high flyer in the last 12 months. So you're getting a lot of that performance showing up in the last 12 months, even though it's been retracing. Maybe interesting for a reversal type trade, as it has had a pretty decent retracement here as well. And we're also seeing Carvana in that upper range. Consolidation had a massive gap higher on earnings. So there's still stock showing up in there. Just be aware of where we're at in that current trend. And in fact, let's jump back. We didn't talk about S&P 500. S&P on that breakout right here, and continuing. If we get a retest here, pulling back to that 525 range, I could see some support. That's what we would want to see on any retracement, is a support around that breakout location around 525. If that were to start to happen, we'd start to see some weakening. As of now, we're just barely approaching that upper extreme range, and another day or two of consolidation, we could potentially get another follow through and breakout. We'll see what kind of catalyst we get going into the week. That'll do it for today's update. Everyone have a fantastic day today.